Hi, let's look at a chart of the day that you can possibly get in your Bloomberg exam. So I'm showing you a chart which is quite interesting and more probable toward understanding the kind of interest expense and the cost of debt for the corporate companies in US. So the IBM rates on the debt touched an all-time low, which 1.625. So that's quite less. So even if they are selling this for 1.65 coupon, they are doing a great deal. So globally, what is happening, and this is a question that that links out to many topics that you can get in the exam, is that in the current scenario, the economy is at an all-time high. The equity markets are at an all-time high, and the probability of default, the spreads are less. The probability of default of these companies are very less. They are sitting on huge cash. They are doing a great amount of repurchase activity. Their future growth seems very robust, but at the same time there are some assumptions which are being used in equity research report, which talks that still the kind of analysis uh, which they have, which says that they'll grow at 5 to 15%, which is phenomenal. And this kind of a boom is quite similar to the one that we have in the dot-com boom. So if you look at the history, the boom was during the dot-com boom in the IT, and again we have a boom in the IBM, Facebook, Google, and a part of that is also the cloud computing. A part of that is also supercomputing. A part of that is also green computing. So all these things are picking up now. And they could ask you the meaning of this chart, the interpretation. They could ask you why the chart is behaving in a particular way. So if you look at the chart, and if you look at how things have moved, you'll see that in July they were low, but again this is an all-time high. But there is a slight dip, and this dip could be dangerous because they came from 2012 to as low as 187. Is this a sign of correction? Probably might be. Let's move in and read what they have here. So IBM 1.25 billion notes due 2002, which yield 65 basis point more than similar treasury yield. So what is the yield plus the treasury? It's 65 basis point, and beat a 1.65% rate of 75 million debt sold last year by semiconductor maker Texas Instrument. So all these companies are getting a very good deal in terms of that. The largest computer service provider also sold 1 billion of notes in 2016 as at 0.45 coupon, matching a record low for maturity obtained by Apple, Unilever, Walt Disney. The debt pays a relative yield of 25 basis point. Now this is phenomenal, just a little over the uh, risk-free rate or the treasury rate. The bonds may be rated AA3 by Moody's Investor, according to Plan, who asked not to be citing his certification. IBM, based on RMOC New York, sold the debt, which a floating rate of 1.25. So this is a one phenomena that you can get the cost of debt, the treasuries, everything suggests there is a boom, a correction is due on the chart, and they might possibly compare this regime in terms of the regime that we had in the year 2000 during the dot-com boom. So so this is a comparison on how debt markets are behaving at the current time. The ratings of all companies are good, their growth is good, their stock is at all-time high. Uh, Volatilities are under control, everything is looking positive. So that's the whole story is, and they could link this with the past and talk about what happened after 2002, what were the signals in 2000 which led to that recession, a small recession after the dot-com boom. So this was about the debt market update for the Bloomberg assessment test. The question they could ask you is how to calculate or which price to discount. So that price should be the risk-free plus the yield. Just remember that. And they could also ask you a kind of comparison between these companies and sovereign debt or municipal debt or different kind of emerging market debt. So in terms of that, IBM is more secure than an emerging market bond like a country of India or other developing countries. So IBM is having a better rating, better status than the whole countries combined. So that's something phenomenal, and this could be seen in the exam. So this was a chart of the day on the debt market update. Hope this was useful. Thank you for listening. and I wish you best of luck for your exam.